Gem International is a new diamond explorer in the richest diamond producing country in Africa, located next to the fourth largest producing diamond mine in the world. International Spotlight is on an 1109 carat diamond recently discovered in Africa by a fellow Canadian junior with a proven operator and finance team. Gem International trades on the TSX Venture Exchange, symbol GI. Visit us at gemdiamondmining.com.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Eric Hadik, president of InsideTrack.com. Welcome back to the show, Eric.
Thanks for having me back, Jim. My pleasure.
Gold, is it a good bet right now with so much uncertainty surrounding the markets?
Well, I think that certainly the first opportunity has come and gone, or just about gone, I should say. When you look at it from a bigger picture scenario, what I described in our interviews since late 2015, and then we discussed it again in the middle of last year, but was on a 6 to 12 month and a 1 to 2 year basis. I thought that 2016 would see a good strong rally into the middle of the year, and then a pretty sharp pullback into a secondary low, ideally in December of 2016. So far, that's what's unfolded, so it is setting the stage for the next phase of what I believe is a multi-year bull market developing in gold. But part of that was when we got some initial buy signals in late December. The objective for those intermediate signals was to see a rally into this current week, January 30th through February 3rd, at which point we could see an initial high. It could see a little bit of a spike higher into next week, but right in this time frame is when I expected to see an initial top. And at that point, there are some really decisive indicators that need to either confirm a bottom, and that would impact what the next pullback would look like, or if they fail at this point, it would show that gold and silver and the gold stocks and that the XAU index and whatnot could pull back and retest the December lows. So that's really hinging on Friday's close and what that reveals with these indicators I'm watching. The one caveat there is that the XAU has given an initial sign of confirmation to a multi-month bottom, and that index had an initial upside target at 92.76 to 93.24 after bottoming right around 72 in December, and very recently it shot up and spiked just above 93. So it's fulfilled the initial upside. The ideal scenario here is to see a pullback for a couple of weeks, but the specifics on that are still kind of in the development stage, and I hope by the end of this week to have more clarification on where I think that pullback low could take hold.
Is the story the same for silver? Yes,
pretty much so. Silver broke through a key level on an intermediate basis at 1730. That was the first thing that silver needed to exceed to confirm a multi-month low, and it has done that this week, so that's a good initial validation to a developing bottom, but it needs to get back up and above the $19 level to really indicate that we've got a 3 to 6 month or longer bottom intact. But silver has, I've discussed this even going back to 2015 when the area around 1350 was major support in silver, but it has traded in these $2.50 ranges for several years now, and it'll kind of trade in one, and then when it breaks above or below it, it'll then kind of shoot up to the next one, and you've seen this kind of trading range, which is it's consistent with a price. I don't know if you'd call it an indicator or a principle of price movement that W.D. Gann explained in some of his work. But so you had these key levels and these key ranges at $13.50, at $16, again at $18.50, and at $21. And silver has really adhered to that trading range scenario. And we bottomed right around $16. We spiked below it a couple times in December, but that was where my downside objective since the peak in July and August, $16 was the downside target. We reached that in December, so I do expect that to continue to hold in the opening months of 2017. So I do think that all the metals are certainly set up in a bottoming phase, but again, there are some critical indicators that need to kick in and confirm that. And I'm also just updated my longer-term outlook in my monthly Inside Track newsletter. So I think that we're being very constructive where metals are concerned, but it could be a slow transition with some good swings in both directions as the metals trace out a larger degree bottom.
No panic then?
I don't think right now, and I think some of that has to do with the dollar, and even though the dollar has seen some corrective action in January, it still is viewed as being pretty stable, and that's one of the things that really keeps a lid on the price of gold and silver. It's not just the direction of the dollar and or the euro, but it's kind of a gauge of the relative confidence in those fiat currencies, and right now there's not any big concern with that, so gold and silver remain under pressure, even as you've seen something like Bitcoin, another indication of some nervousness or anxiety out there. That has had some much stronger moves over the last couple months, and there's even some interesting cycles and charts coming into play in that in the near future, but that kind of reflects it more than gold and silver. That reflects, the geopolitical uncertainty, but for now I don't see a panic coming in gold and silver, at least not anything to a large degree. Something that might be proportional to a couple month trend, that's certainly possible, but anything larger scale than that I don't expect right now.
Is Bitcoin kind of a hard thing to do because when it swings, it doesn't just swing, it either skyrockets or plummets?
Yeah, and with any type of technical or cyclical analysis, you're really going on, you're trying to measure mass psychology, and when you've got as limited of data as you do with Bitcoin, you can't put too high of a confidence level in that analysis. But I have seen some developing patterns as far as cyclically speaking in Bitcoin over the last 2 years, and so I'm watching to see if that repeats itself, and February is a key month where that's concerned. But you're right, the swings are certainly wilder, but it also has some characteristics of a normal market when you even look at the move since its in early August it bottomed, and then it started to trace out a steady uptrend. And like many uptrends, it waited till really mid-December to enter a parabolic phase, and that's when it shot up into early January and then pulled back almost as sharply. There's certainly some indicators of normal or more normal trading where you are starting to get a bit more mass psychology involved and more liquidity. So I'm certainly watching it closer and applying some of this analysis to it.
Are people more interested in Bitcoin because they've seen what the Indian government has done with their war on cash and gold?
I think it's been a lot of those factors. You know, a couple months ago it was also Venezuela really pushing the price of Bitcoin. I think that and it's so much quicker and easier access from a digital perspective. So you do get quicker movement into it, but also because it's a very limited supply, you get the bigger reactions to that influx and outflow of investor interest. What's
the current value of Bitcoin right now?
Last I looked, it was trading around 970, and it had shot up to a peak in early January around 1130, and interestingly, that was right where it had previously peaked in November of 2013. So it's kind of testing a really key resistance level. But again, as I said, that's kind of taken with a grain of salt because of especially going back to that November 2013 time frame, it was such a spike and a lesser liquidity move that it's hard to put too much weight on that resistance point. But from a purely chart standpoint, it did retest that high and now is trying to see if it can break through it. And if it's able to do that in the near future, that could certainly spur another quick rally just on that concept of hitting new high ground.
Should we be keeping more of an eye on cyber currencies?
I definitely think that is going to be a developing factor in the coming years, and I think that it's also sometimes a quicker indication of, like we were just talking about, of some investor anxiety, of geopolitical uncertainty and upheaval. And so I definitely think it's something that needs to be continually monitored, and I think that we're definitely seeing the early stages of a transition that is very likely to continue evolving over the coming years. And it's interesting that this is happening during this 40-year cycle that I've been describing for the last decade or more, where every 40 years that our country has been in existence, and even dating before then in Europe and other countries, you've had this battle between up until now, it's been between fiat currency and hard currency, gold, silver, even going back to copper and pieces of 8, way back hundreds of years ago. But that 40-year cycle has timed these conflicts and these battles consistently, and the late 1970s were the last phase of that, and now you've got it recurring in the mid to late 2010s, and with Bitcoin coming on the scene and adding a new wrinkle to that battle, that debate between the ideal type of currency, and that's what cycles are about too. They're a spiral that's returning to a similar point, but each time evolving to a higher or lower degree, depending on whether you're in an up or down trend. But I think that Bitcoin is certainly playing right into that whole scenario, and really 2013 was when it came into real focus, and that's exactly when I was looking for the first phase from 2013 to late 2016, the first phase of this 40-year cycle battle and transition, and then I called that the action phase, and then the reaction phase I expected from 2017 to 2021, when you get more overt moves to what has previously been unfolding in the market, sometimes beneath the surface, or at least out of the view of the masses. And so 2017 to 2021 is the perfect time for something like digital currency to gain a greater foothold and to enter that fray and that battle between currency validity.
We'll have more with Eric Hadik right after the break.
I'm Larry Ray, President and CEO of American Manganese, Inc., listed on the TSX Venture, ticker symbol AMY, A-M-Y, with proprietary patents in the U.S., China, and South Africa. Our focus is on recycling lithium-ion batteries for electric vehicles. China recently legislated the responsibility for recycling onto their electric vehicle manufacturers and importers. For more information, please visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
Welcome back. We're speaking with Eric Hadik. Eric, what's your outlook for the U.S. dollar?
Well, and that's the other thing that really plays into that well. On a longer-term basis, I described why I thought that 2013 to late 2016, even into early 2017, would be a pretty significant move up in the price of the dollar index, but at the same time, there would be a consistent chipping away at the underpinning of the U.S. dollar, and that kind of goes along with that action-reaction scenario that I just described, where you get these actions occurring, some of them off the radar of most investors, but I've cited these before, but you can look at the different banks and currency alignments that have been taking place in 2013 through 2016. Just a couple examples: the New Development Bank by the BRICS nations, the Asian Infrastructure Investment Bank by China and several Asian nations, even last year with the yuan, the Shanghai Gold Fix first in April, and then the yuan being included into the IMF's SDR calculation in October. It's this steady movement away from the U.S. dollar being the sole kingpin of global currency trade and currency reserve. And that doesn't mean that any of that is going to completely unseat the dollar at any time in the near future, but that it is setting the stage for the dollar to be brought down a peg or two, which could have a dramatic impact on our markets and on everything related to them. So I do think that the dollar index is poised for a significant top. I'm looking at the first half of 2017. I've even discussed some more specific cycles that I'm looking at and price objectives when I think that the dollar index could top. And once that occurs, if that occurs, that would certainly be one of the things, one of the negative pressures that would come off of gold and silver and start to open up a little more headway for them to move higher. But there's other things related to that I'm really watching close over the next 1 to 2 years. And even the scenario, I know you and I discussed it a couple times in the middle of last year, the close correlation between the dollar movement the multi-year swings in the dollar, and the shift between Democratic and Republican administrations in America. And I described in a couple of those interviews with you last year why all of my work was showing that the dollar should be peaking in early 2017 and that was strongly favoring a Republican being in office, because over the last 40 years it's been very consistent that the dollar peaks and starts to enter multi-year declines during Republican administrations, and it bottoms and enters multi-year advances during Democratic administrations. And some of that has to do with their guiding philosophy, and even now with Trump really talking about trying to increase U.S. manufacturing and the U.S. workforce and exports. One of the best ways to do that is to allow the dollar start to come down in value, so that other nations' currencies become more valuable, and all of a sudden U.S.-made goods on a relative scale become more affordable. And you saw that back in the mid-'80s, right after the Plaza Accord, and for several years straight, every time you'd click on the TV and morning talk shows, you'd see James Baker making the rounds and talking the dollar down. And the dollar just got bashed from 85 to about 91, 92. And then shortly after Clinton took office, the dollar bottomed and started to move higher until 2001. George W. Bush took office, and who was one of the key players in the legal battle and George Bush's early administration, but James Baker again, and just saying that he's one of the ones that has influence there. And the dollar topped and headed down until 2008. Obama comes into office, the dollar bottoms, and it really moved sideways into about 2011, 2013, and then has seen a pretty strong advance. But all of my cycles and all of my work were telling me to look for a dollar peak by the first half of 2017, and that's why I was saying that I thought a Republican president was far more likely, just based on that correlation and that dollar analysis.
Eric, thank you so much for chatting with us.
Thanks for having me back, Jim. Glad to be here.
My guest has been Eric Hadik, president of InsideTrack.com, inside spelled INSIIDE. You're listening to HowStreet.com radio. Find us on Twitter at Talk Digital Net. Our YouTube channel is Talk Digital Network. Questions for the show can be emailed to info@HowStreet.com. I'm Jim Goddard. Thanks for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.